I think the critical elements to watch out for is the fact that private consumption expenditure has been better for the fourth quarter. That's also a contributor in terms of how the GDP numbers are panning out. Now, more important than the Q4 numbers, I think, is the prognosis of the next financial year. Next financial year, I think what is really going to happen is that we would, as India, depend very significantly on the domestic demand because of all the noise around the Trump tariffs and how the global growth actually pans out. Significantly, therefore, we are looking at the domestic consumption and the most critical area that we would be looking at is how the rural consumption pans out. Urban consumption had been doing the heavy lifting in terms of the consumption expenditure within the GDP for quite some time. There is now a sense that there is a bliss that has happened in terms of the urban consumption, and especially the savings, the pent-up savings that had happened during the COVID period is now over. Yes, the rate cuts of the Reserve Bank of India might be beneficial to the urban consumption, but we'll also have to look at the income effect, whereby we have seen some amount of job losses and lower salary increments in the urban sector. On the other side, for the rural sector, the story is relatively better, with food prices having come down, which might actually push up the discretionary expenditure. Plus, the agricultural growth has been good, which might also provide, and along with the MSP increases, might also provide a beneficial impact in terms of the income effect. So broadly, we are looking at these main drivers. The private expenditure, capex expenditure may continue to lag even though interest rates are coming down. Our prognosis at Yes Bank is that growth remains at a very sideways at 6.5% even for FY26, which also appears to be more the full productivity level or the growth in terms of the Indian economy at this point in time.